So you got your real estate taxes in the mail. And if you're like most homeowners, you opened it up, looked at those numbers, and thought, wow, how am I paying this much? Well, before you write that check, hold on, because today I'm telling you 8 ways not to pay real estate taxes in Logan County, or at least to pay a whole lot less. Stick with me to the end because some of these tips have important deadlines to apply for. And at the end, I'm going to tell you how some homeowners in Logan County are paying zero taxes for up to 12 years. Yes, zero. So let's get into it. Let's start with an easy one that most people already have but just don't realize it. If you own your home and live in it, then you qualify for the owner occupied tax credit. That means that your taxes are automatically lower than if you'd rented it out or used it as a vacation home. Check your bill. You should see a line for owner occupied tax credit. And if you don't, you need to call the county auditor because you're missing out on free savings. And they do sometimes make mistakes. In fact, when I was preparing for this video, I realized that I was not getting the owner occupied tax credit. So I called the county auditor and they told me just come on down, fill out an application, and they'll get it taken care of. So don't miss out on that savings. The savings potential with this one is small, but hey, money is money. Now, if you're 65 years or older, or if you're permanently disabled, there's another break waiting for you, the homestead exemption. Basically, it knocks a chunk off your tax bill every year. And on average, most people in Logan County save about $350 per year on this one. And if you're a disabled veteran, you get an even bigger discount with no income restriction. To get this, you have to fill out a short application with the county auditor. But once you get it, you're all set. The potential savings, a few $100 a year. Not bad. You ever had something bad happen to your house? Tornado, fire, flood, you name it. Most people don't know this, but if your house gets damaged, you can actually apply for a property tax reduction. Why? Because your house isn't worth as much in that condition. And why should you be taxed as if it is? For example, after the tornadoes hit Logan County last March, homeowners who had significant property damage were able to lower their tax bills just by filling out a simple form. If disaster strikes, don't just call the insurance company, call the county auditor too. The potential savings depends on the damage. Could be hundreds or even thousands of dollars. Here's a fun fact. The county's property value assessments aren't always right. If you think your property is overvalued, meaning they're taxing you too much, then you can actually challenge it with the Board of Revision. You will need proof though, like a recent home appraisal or examples of similar homes that are taxed less. Not sure if your home is overvalued, but just give me a call. I'd be glad to pull some comparable sales and help you figure out if you have a case. And listen, you only have from January 1st to March 31st to get this done, so mark your calendar. Potential savings could be small or massive depending on how much they've overvalued your property. If you own farmland or even a big piece of land that could be used for agriculture, this is a big one. It's called CAUV. It stands for Current Agricultural Use Valuation. Sounds complicated, but here's what it means. Instead of being taxed like regular property, your land gets taxed at a much lower agricultural rate, which could save you thousands of dollars every year. Now, here's the part that most people don't always realize. You don't actually have to be farming in the traditional sense. To qualify, your land must be at least 10 acres and be used for some kind of agricultural production, or less than 10 acres, but generating at least $2,500 from any kind of agricultural activity. And that doesn't necessarily mean plowing fields and planting corn. You could grow and harvest trees or manage a timber lot or even raise bees. If it's something that's commercially harvested, it could qualify. If you own a big piece of land and you're not using this could be an easy way to significantly reduce your tax bill. What if you own farmland, but you don't actually want to farm it? Well, the government has a deal for you. They'll actually pay you to let the land sit there. It's called the Conservation Reserve Program, or CRP. Basically, instead of growing crops, you let the land go natural to help the environment. And in return, the government sends you a check every year. And your property taxes go down. If you own unused farmland, this one's a no-brainer. The potential savings? You get tax reduction and cash payments. It's a win-win. If you're planning major renovations, there's a way to get out of paying extra taxes for years. It's called the Community Reinvestment Area, and here's how it works. Normally, when you make significant improvements to your home, like putting in a new kitchen or bathroom or finishing a basement or adding on a garage, then your property's value goes up. And when your property's value goes up, so do your property's taxes. Now, to qualify for this tax break, the improvements that you do need to increase the value of your property by at least $10,000, which, let's face it, is not very hard. This is the important part. You can't just do the renovation and then apply later. You have to apply for this program before you start construction. But with the CRA program, the government will actually give you a 50% discount on the taxes on the improved value of your property. So that means you can enjoy all your upgrades without all the extra taxes. So if you're already planning to remodel, why not make sure those improvements don't raise your taxes for the next 5 years? If you have any questions about how to take advantage of this program, just give me a call. I'll walk you through the process. The savings potential could be small or massive, just depends on how much you want to improve your home. All right, this is the grand finale. How to pay almost zero property taxes for years. There are some new subdivisions in Buff Mountain where you don't have to pay any real estate taxes on the value of the home for up to 12 years. Now, you still have to pay taxes on the unimproved lot, which is just a few dollars a year, but zero taxes on the value of the home, which could be a huge savings. Now, you might be wondering, why do these tax abatements exist? After all, that's a huge savings. And that's a good question because they're relatively new. Well, for years, the population and the housing market in Belle Fountain have been relatively stagnant. So the county and the city offered these tax incentives to encourage development, to encourage people to build homes, and to encourage growth in our community. By giving new homeowners a tax break, they encourage more people to build and buy in these areas. More houses mean more businesses, more jobs, and a stronger local economy. So while the county gives up some tax revenue in the short term, they're making Logan County a lot more attractive in the long run. Let's break this down with an example. Let's say you buy a $400,000 house in one of these tax abated neighborhoods. Now, in Logan County, a house at that price could easily have taxes around $7,000 per year. If you multiply 7,000 times 12 years, that's a savings of $84,000. $84,000 over 12 years, $7,000 a year, or $583 per month. That's an extra $583 in your pocket every single month. Money that you can use to make improvements to your house, pay down your debt faster, or just go on more vacations. Now, the later phases of these subdivisions only has a tax abatement of 5 years, but that's still a savings of $35,000, which is nothing to ignore. Now, if you've been thinking about buying a new home, then the tax abatement could be a deciding factor in making it way more affordable. The savings potential? Tens of thousands of dollars over time. This is by far the biggest saver on the list. So there you have it. 8 ways to not pay real estate taxes in Logan County. Some are quick and easy, some take a little bit of work, but in every case, they save you money. Now, if you have questions about any of these or just want to talk through your options, well, then just give me a call. I'd love to help you out. And if you're wondering how these tax savings can make buying a new home more affordable, let's talk. I can help you find out which builders are offering the best incentives. So let me know which one of these you're using to save money. Thanks for watching, and I'll see you next time.